Keeping it to the markets for now, Saurabh Mukherjea did talk to us earlier on in the day, and he believes ITC is a classic example of coffee can company. He remains positive on HDFC Bank as well, along with Kotak Mahindra Bank among the private lenders space.
ITC, it's a classic coffee can company, 10% revenue growth, 15% ROC. It meets those criteria comfortably, but the stock hasn't done that much in 3-4 years, and that's the kind of situation which always appeals to me. High quality dominant franchise, but it doesn't seem to me that that the market has really priced to a level where it becomes unattractive. So if you take the longer view, and I'm not saying take a decade long view, even if you take a 5-year view, franchises like ITC, Nestle, Asian Paints make you lots of money. I think the frontline Indian private sector banks, especially HDFC Bank and Kotak Bank, and I put the caveat both are in our clients' portfolios. I think both HDFC Bank and Kotak Bank fit that description very nicely. In a year like 2017 and the early part of 2018, when everybody was, every other borrower I saw reduced the tenor of their liabilities, i.e. they looked for shorter and shorter dated money. Bajaj Finance, from what I can see in the annual report, didn't do that. They dragged up the tenor of their liabilities. So if you have longer dated liabilities, shorter dated assets, you're crunching the asset liability mismatch down. You've got a big cash generative corporate group behind you, and over and above that you've got credible, competent management. I think it's a good combination, and as I've said repeatedly, I've never lost that much sleep about short-term valuations for franchises of this quality.
Well, that's Saurabh Mukherjea's take over there.